morning, all. Ira Epstein with your morning future subscriber video for this Wednesday, the 13th of July, 2022, 5:26 a.m. Central Time. At 6 this morning, just about a half hour from now, we're going to get the Mortgage Bankers Association numbers. But the elephant in the room is going to be the CPI index. It's forecast to be up 1.1% from the May number. Core CPI expected up 0.5% compared to May's 0.6%. Data comes out at 7:30 a.m. Central Time. The headline number is what you have to keep your eye on as well. That could be 8.8%, 8.8% in June. That's the highest in some years. Now, I know that we all look at that, but that's not what the Fed does. The Fed has another key index. I'm going to review that today in my written newsletter. I began writing that early this morning already. We'll talk about that. We get the Conference Board's U.S. Help Wanted Index. That comes out at 9. Last month's index, 178.6. Again, people are looking at that to see, are corporations holding back now, saying, hey, inflation, there's only so much they can pass on. If they lose a worker, maybe you don't replace it. You try to figure out ways to work around it. Same companies and factories and so on around the country. In the UK, to make matters even worse, natural gas prices had a surge because a Norwegian North Sea platform went down. Now, I don't know yet how much damage happened to that, but you're looking at a 23% increase on a surge this morning. Making it worse is where I was headed. They're having one of their record heat waves right now there. Chinese export data, the economic data, as you can see, they took off in June, and why? Well, a lot of things. The ports were still working even though the city factories were shut down. So they were catching up and getting things moved out, is my opinion. Tomorrow, the elephant in the room going to be the J.P. Morgan earnings. So when we look at the market, it's today about figuring out how you want to go into this report, the CPI number report, and you're getting a pause. You've had a heck of a break. The market is pausing. We've had a little bit of a bounce. We'll cover all that in a moment here. Recently, we've seen the bonds soar in the futures market, same in the 10-year, but not as much in the 5, and that continues to be the flattening of the curve yield. In the eurocurrency, we got as low as 100.54. I think yesterday we were just about 8-9 points lower than that. Haven't yet breached where we're at here in the parity level. The British pound only unchanged. This is not good news for that market. It's going to be weighing on some ugly economic data. You are still looking at silver under selling pressure and the copper market unable to give you a bounce. Keep your eye on that copper. They call it Dr. Copper for many reasons. You saw the huge break yesterday off the U.S. supply demand report. And what you really got out of that report and the way to look at it is that barring a real weather serious damage to crops, you have ample crops in the United States. Now, that's going to get exported. You're still looking, though, at a 587 D's corn. You're not looking at $8. You're not looking at $12 wheat. You're looking at $8 wheat. You're not looking at near $17 soybeans. You're looking at $13. These are high by normal standards, but not absurdly high. That is the key. I remember for years when we talked beans in the teens. So anything under 13 just brings you back to that norm that it was a high number. Keep that in the back of your mind. The cotton market just can't get out of its own way. Here you are at 88, no longer pushing numbers that were talk of 100 plus. In the energy markets, you're not talking here going into the president meeting with the Saudi prince. The Brent crude is trading sharply higher. You're at under 100. And that, I think, is just absolutely super important. Our mini nat is 96.60. The differential between the two, when you go October there, is different. Now, if I went here to QM, let's do that, QMV 22. There's your bigger difference. That's your $5.40, but it's not 7. It's not 660 that it was recently up at. Those are the things that I'm trying to point out to you, and you can get a feel for what they're doing. So if we could together, let's take a look at the chart action and see what we've got. You began a rally back here on the 30th of June. We're at the 13th of July. Carried you up, didn't quite make it to the upper Bollinger Band, and you've settled back to the neutral zone. For those of you new to what I teach, and this is a great time for you to take our charting courses too, the neutral point on a chart, most charts will be the 18-day, the 18-week, whatever, moving average of closes. Some people use a 20, some a 21. I have found in futures especially, 18 really serves me well in my method of teaching and putting out trade recommendations, trading, all that. So this is where I see the market neutral. The trend is up going into this report. You have higher lows, higher highs. However, if you step back and you go to the weekly charts, the same information, the 18-week is getting ready to cross underneath the 100. If it crosses under that, that's a bearish, if you will, crossover that normally leads to lower prices. First target would be 35.92. If you get good action today out of the CPI and it's a big miss for whatever reason, who knows, the market could rally to 41.16 to 41.10. It would be out of this downtrend. So a key number on the weekly chart, weekly, write that down, is 39.50.75. You're going to have that on all the weekly charts on these markets. So resistance on weekly, support on daily. I'll let the two come together before I tell you to do anything. You have the similar pattern in the micro Dow. Number one, I don't want to go through a major report. So I'm not interested in any buy or sell signals in this market. It's going to react off the report, not the chart. Get the chart out of the way, action, and then I'll come back and say the chart's the most important thing. Right now it's the report today. And the support comes in 308.81. The trend changes if you get under 307.39. It's only a 150 point difference there. So you got to keep your eye on it. Now, if you take out 307.39 on the yellow line, which is called the swing line, again in my charting course, you will change the pattern from one of higher lows and higher highs to a higher high, you see that, and then a lower low. No trend, and I'll still argue you're getting caught in the sideways action of the Bollinger Bands and may want to stay there for a while. I see that same identical action in the NASDAQ, don't you? Let me just even widen this out a bit more for you so you get to see it. Now remember, this is a 200-day average, the 100. The upper Bollinger Band lower. What's the rule in Bollinger Bands? 95% of the time the market will trade within them. And Ira's rule, the first time you hit a band, if you're not embedded, embedded means that the slow stochastic readings right here, both of them are going and staying either under 20, which is called embedded, or over 80, which is called embedded. You have neither of that happening. Therefore, the market is neutral in momentum, resistance up here, support here, and is there anything that could break the trend on this? Unlike some of the others, you'd have to get under 11,350.75. Got that? But then you'd be right into the Bollinger Band. I'm going to repeat, I think you're caught in a sideways action at this point. What about the Russell? Same identical thing. I mean, it just is staring you in the face. And you can come back to the weekly charts and see that even if you rally, the resistance is the 18-week average of closes. Not an awful lot there, one way or the other. Then in the VIX. In the VIX, I wish we had gotten down to the Bollinger Band and all this. The first reaction would be the coming back up to the 100-day average in green, then the 18. The trend is down. Lower highs, lower lows. To negate the downtrend, you've got to get over 29.82, which would mean about a 260-point rally. And what else does it mean? It means you probably have a big break going underway in the stock market. This market, if you take a look with me, embedded is day 1. 2, look on the left, the SSTO, that's day 2. Day 3, what did we do yesterday? You lose the embedded reading. That often means a rally to the closest main moving average. Since it already hit the 100, I generally then move to the 18 as the objective in the market. And that would just still be neutral to bearish in the marketplace. Why? You haven't closed over the 100. That would turn the momentum up. When you're over the 18-day average, your bias is up. Therefore, if you have the swing line pointing down and the bias up, the two wipe each other out. Right now the bearish bias is here, but when you have any slow stochastic reading under 30, either of the numbers, it's oversold. I tell traders avoid that. You walk away. It's a filter for you. In the euro, well, I'll be surprised if you don't hit the lower Bollinger Band. You've done it for 1, 2, 3, 4, 5, 6 days. Does this one hit it? I don't know if it did. Low 1042.05. No, it did not. So 6 days. And you're turning to the right, that's fine. What is the market? Well, I think that after the CPI number and we see the reaction, I think that if you want to, you can probe the short side. Selling the market at 101.58, let's round. Remember, it trades in fives, this is fractions. 108.58, looking for a challenge of the lower band of 123. If you sell it, be out if the market settles over 21 in the slow stochastic. Now let me give you the edge here for those of you brand new off of some of the promotions we're running for Prime Day. Settlement time is 2 o'clock Central Time. However, the market finishes trading. Settlement is different time than trading time at 4 o'clock. So you're able to see the market, not have to jump through a hoop the way you do in the stock market where everything closes at 3 p.m. Central Time, 4 p.m. Eastern Time. Very different in futures. Most futures do that. There are a few that close settlement and close time at the same. So all you need to do ever is hit this number, show details, and if you have a quote screen set up, which most do, that'll be it. I don't know how you do this in your other charting software. I know what we do, and I'm not going to be a service for other charting software. In the Swissy, you're caught in this lower and upper Bollinger Band and you're oversold. Stay away. I can't say it enough. British pound. Okay, are we going to embed is the only question I have. You're not doing it there. You're not doing it there. Why is that my only question? Because when the market actually got down here, the first challenge, and it wasn't embedded right at these numbers. Got them? I told traders I think that's where you want to be out of shorts now. I know it rallied back to the 3-day average of high, but it was still oversold. That's the resistance point, and this was the cover again. I'll wait. You either embed or give me a better chart setup. Canadian dollar. No big deal to do here. Look at how narrow these Bollinger Bands are. This is not a fluke that I have the scale on the chart set wrong, by the way. This is, and I'll change the scale for you. You can see how narrow it is. I don't like trading in those patterns. Why? That's where you get yourself short. You're looking for the breakout. You don't get it. Rallies just enough back up here to knock you out of the markets over and over. I'll be patient and wait. Aussie dollar is the similar pattern. Now remember, we have the Bank of New Zealand, the RBA is going to come out. We're going to hear interest rates. Everybody's talking higher rates. At the same time, you're exceptionally oversold. Here, you had lost the embedded reading. You came down. You got it back. You can only get it back the day after you lose it. After that, it has to rebuild. You kept it lost, and now if it comes up to let you sell the market, you're already at a 25 reading. For those of you that have taken my enhanced Bollinger Band course, you know you wouldn't do that. You walk away from the market. What about the New Zealand currency? Well, both numbers, are they embedding? Day 1, 2, today. You have to wait. You need 3 days in a row where both numbers here are under the 20 level. If they're under the 20 level, you're going to be looking on day 4 to begin the selling process. It's one of the highest probability trades I know of. It's not there. Mexican peso, this was, as I said yesterday morning. If you were short, and short was the way to be, do you deny that? I even mentioned it to you. I said, all right, if you get short, though, what do you do? I didn't want to play between the 18 and the 100-day average, and that was wrong, as it turns out, because you broke through it again. I thought that would support better. But this is a cover-all short. Not making a trade is not losing. Making a trade and having a loss is losing. In the Japanese yen, this market is flirting, doesn't want to embed. Now, here's been the problem. I know the trend is down. It's evident. We've had a lot of trades this year. Short the yen. I don't recall being long. Short the yen. There might be one or two where we had an opportunity on the long side, but it's been primarily short. There's a lot of pressure on Japan to change its monetary policy, but not from within. The bank is still holding. Now, your fear in being short this at any point is you will wake up one morning, the bank made a modification to that, and you'll be up dramatically, hundreds of points. It's a market that I am keeping away from for that reason. I realize the danger. I got caught early on, maybe 8 years ago, 9 years ago, in the Swiss National Bank one night. The day before said, no, we are not going to raise interest rates, and I had a beautiful chart set up that turned out to be the nightmare setup as they next morning changed their mind. They didn't alert the market. They just made the move. They had just said within a 24-hour period no, and of course the market went up hundreds of points instantly. You don't want to get caught in that. And you hear, I believe the bank. That was a mistake. So I don't have much faith in the Swiss National Bank. Not because I lost. You cannot tell the market that. That's what our Fed is caught in the same thing. If they do one thing, like right now, they're going to get a CPI number. They have no choice but to go 75 basis points. I know you're going to say, well, Ira, it's going to come in at 4% instead of 8. Okay, then they don't have to do it. Got the absurdity of that? That's not going to happen. So whether this is up to an 8.8 or an 8.0, who cares? They're going to fight the inflation on this. They'll modify or have their room in September to see what things are doing. Dollar index, you keep fighting the upper Bollinger Band as you should. This is an embedded bullish reading. Obviously, I'm not going to tell you to buy going into the CPI number. The number to go long is 107.37. I won't do that until I see the report and the reaction to it. But that's the number, looking for resistance back up at the 108.42 level. Dollar just looks very, very bullish. And when you even come to the weekly charts, you can see the resistance on the weekly is here at 108.20. That's the weekly part of it, with support all the way back here. I am still very much, I'm still very much in the bull camp in this market. Fully embedded reading here. That's what I wanted you to see. The micro July Bitcoin. You're caught in the Bollinger Bands. I pointed this out on the rally. You had been with me on the short side, and we covered perfectly right as the market was losing its embedded reading. It was a neat little trade. It went up here. Now I don't know what to do with it. You're just caught in that pattern. That is a dangerous pattern. When you get these, you get big breakouts up or down. The 30-year bond. So we're in an uptrend, higher lows, higher highs, falling interest rates, not rising interest rates on the daily chart. That's not how the weekly chart looks. The weekly chart, if you look with me, is the exact opposite fight. Here it is. You've got the resistance at the 18-day average. The high of this week, look on the top left, was 142.22. You have not taken that out. You've got lower highs, lower lows. Why would I want to even consider remotely going into the report today? It just would make no sense. So I'm very much, and I told you, a cash in hand. I'm waiting for the next round of trading, and you're there with me. So this will set up our next round up until we pause a bit in front of July 26th when the two-day FOMC meeting begins, and then we have clear sailing in terms of Fed action, as far as I'm concerned, up until the September FOMC meeting. I don't like in futures going through reports. The leverage is too big against you. 90% leverage is great in normal times. 50% in the stock market's all you can get, but it kills you. And why? It can kill you on reports because the market is not going to look at chart action. It's going to look at the report. That either resets the chart and reaffirms the action, or it changes it abruptly. I've learned that over many, many difficult years. By the way you learn in futures trading is losing. Think of all the monies that I've lost. I know that sounds funny. Winning just means you keep doing the same thing. What did you learn? Oh, this works every time. Nothing works all the time. So what are the modifications to good ideas to keep them working? In this pattern, higher lows, higher highs. Okay, and you've settled back in. Notice it's not as strong a chart as the 10-year, and the 5-year didn't get as much a rally either. That keeps the 5-year bid, remember, when futures go up, yields fall. That keeps the 5-year bid stronger than the 30 and keeps the inversion in place. Then we get to the gold market. Now you just made this morning, the low yesterday was 1721.60. You made a lower low, which means you're not a seller at the 3-day average. So we've tried that. We haven't been able to get up there. Or we have gotten to the point where the market makes the lower low first. You don't sell that off of the enhanced Bollinger Band course. In the silver market, so in the silver, I am still in the bear camp at 1914. You have not taken out yesterday's low. Do I want you to make a trade in front of the CPI? No. I'm just going to hold my hand. But on my written updates, after I see the reaction set in, wouldn't surprise me if I'm either issuing special updates or waiting for the 11:30 time frame when I put out the normal update to put out a bunch of trades. I just don't know. I want to see reactions. In the copper market, we have the lower highs, lower lows, and as you can see, the market is just sort of fighting right here. Lost the embedded reading and kept it lost, yet started back down. Could it re-embed? It could. I've seen that happen. I'll patiently wait. But the market is saying, what the copper story is saying, the world is in a slowdown from a recession and from COVID and from energy prices, those three things. Platinum, this will cover all short area. I said that yesterday. So got down, you lost the embedded reading, you had a rally. This would not have been on my work as a sale again, but some people have that. And each time you hit a Bollinger Band, you want to walk away. Yes, there'll be a time when it keeps going. Don't worry about them. So you don't catch that 5% of the time. You're going to catch a monster amount of this using the idea of coming out against the natural resistance point that Bollinger Bands provide. Platinum too. Here you got up. The market hit that number. I said, okay, if it continues, which it did, I said you're probably going to run into resistance at all the combination of the 200-day average, the 100, and I don't think you're going very far, and you have pulled back. I mean, just think about it. Even if you got out here, where I think you should have, at 1993.40, you're back for all purposes there. $8 difference, it's nothing. Cattle took off yesterday. So what got in the cattle? My opinion is for the cattle market and the feeder cattle market, cheap grain prices. We are no longer $8 corn, so now all of a sudden people want that. Number two, prices have slipped back from holiday levels. This is June 9th, and here we are. Let's get to July 4th. You can see, the holiday. This is when the cattle would have been slaughtered, getting everything ready here. And now in the stores, you're probably seeing it has leveled off. I doubt that it's gone up very much. Feeders, on the other hand, now you're saying, wait a minute, I can raise these feeder cattle and make more money because my feed cost has dropped. Everything equal, I can make more money at the same identical price from selling to the stores because my feed cost has gone down while I want more cattle, and that's what happened there. Hogs just sideways, not much going on. Then we get to the corn market. So, we come back in the corn, and I think we want to look at this for just 1 minute here. Whoa. I'm going to take this. Corn got as high right here at 827. So earlier when I was telling you that, hey, look, if you look at these grain prices, you're not 8, you're sitting at 580. I wasn't exaggerating. I mean, this is what they've done. Now, that will translate downward in inflation. It's not an $8 number, it's a under $6 number. These are important things. When you look at the energies, you're going to get the feel there for it. The problem is the market is looking forward and saying, come the fall, we're going to get all this demand for energy. The crops, while you're down in December corn to 582, you haven't harvested it. A lot can go wrong between July 13th and harvest time in September. So that's what the market is looking at. Is there anything bullish now on this chart? No. Is there a reason to be short when you're oversold? No. Wheat market, same story. I know I'm a broken record here, just to make a point. Wheat got up as high as 1363. You're at 801. It's difficult to get too short down here. Do you understand what I'm getting at? I know you're going to tell me all these things about it. Well, it got up and peaked off the Ukraine situation because 25% of the world's supplies of wheat come out of Russia, Ukraine, and all that. Ukraine's one of the major producers. They're getting about a third of their crop out to the market. There's lots of talk, let's get more. But understand, the lands that Russia has taken over, they're putting that and they're rebranding that corn as theirs. Then they're putting it on ships, and they're getting countries like Egypt and Middle Eastern countries and other areas to buy their corn, and they will. And wheat and everything else that Russia produces. Countries, not everybody's with what Europe is doing and the United States. India is buying like mad. China's buying like mad products out of Russia. Keep that in the back of your mind. And Russia's a major wheat producers. They're the big boys, big time boys. So when I look at all that, you're back to normal. I know that sounds funny, but that is, you're down nearly $6 from your peak. Same thing's going to be in the KC wheat. You got to go to the weekly chart, but I'm not going to show it on everything. I will show it, though, in soybeans. We might as well look and see what the weekly charts look like there so you get your perspective. You had gotten up, go back here. This is all off of the Ukraine situation. You got up 1765. You do see that, okay? Came back one time, 1784. That's your most recent high made a month ago, June 10th. So now, where are you in relation to that? $4.25 lower. These aren't small breaks, and you're getting overdone without the crop in. That's the point that I want you to know. I've traded this all my life in futures. I see it. I've been a broker since '69. I am not bullish. I'm getting to the point where I don't want to be bearish. There's a huge difference. The meal market, still in a bull camp here. Higher lows, higher highs. Support comes in at 420. Your stop would have to be 409.90. Too big of a dollar risk. Oil, bearish still. This game changed when Indonesia put back out, Indonesia, Malaysia, all those countries. First, they took oil off the market because as prices soared on them, they wanted to be certain that they had their numbers. They were 83. They couldn't afford that. This is a staple of their society. Well, it has fallen back 20%. Now you get interested, is the market getting itself overdone to the downside? That is the points that I'm making for you in the grains. All right, let's leave that. In the coffee, if you take a look, the market is very oversold. It's trying to embed. You need 3 days in a low. Look on the left where the slow stochastic has got readings under 20. Let today go by you. Cocoa has been bearish, but the pattern is lower high, lower low. We were bearish up here. Told you to cover shorts back here, and the market has gone sideways since then. I'm looking for new trades for everybody. You're just getting to the point where I'm going to start putting them out again. So this is an exciting time. In the cotton market, boy, am I bearish. So we talked on this update going short for you here, and you are at 94.13. You're at 88.38. That's really nice action, don't you agree? 94.13 to 600, 3,000 a contract. Take half profit, 82.81. Be out if you get a reading at any point over 21. We've covered that. You just come to the top here and you look at the times, and you can see settlement time is 2:15, but the market finishes trading at what time? I don't see the close on here. I'm going to ask the guys why they didn't do that. Okay, I got to write myself a note somewhere, but I will tell them to do that. And I think it's just before that, so pay attention. Sugar, give you an example. They don't have it in there, and I know what it is. This is the ICE, and ICE didn't broadcast it, so I will have them do that. Brent, you're down to the Bollinger Band. Am I going to have you go short against the Bollinger Band? How's the word never sound to you? You're not embedded either. This is where pros are covering shorts. They're not looking to go short. Same identical thing in WTI. This is where you're covering shorts. You're not looking to do other things. In the gasoline market, you have collapsed, and I told you your prices were going to come down. You know the service stations were holding prices up as all this fell. As one of you wrote me, it was a 59-cent spread. well, you can see everything's collapsing on it. Gasoline prices right now are going to come down before we get to the Labor Day holiday. Then you'll probably see your swing right in front of that going up again. Heating oil, not as bearish as gasoline, but remember, this is actually jet fuel as well, but it's still in the bear camp. You have the trend up, you're under the 18-day average, the bias down. So this heat spell we had in the U.S., I didn't realize the market was anticipating it back here. That was a losing day for me in that market, and that's what it did. And now it's all built into the market. So let's see what happens. You're trying to peek out after that rally off of that. So I'm Ira Epstein. I wish you all a good morning. I will talk to you all in the written updates at about 11:30. Take care.